Good morning. It's a trading hour. We are into midweek and we are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormus Fatakia, with me Sonal Butra. We are grinding slightly lower. Sonal, we're heading into the weekly expiry tomorrow, but this potential trade deal between India and the US is proving out to be a bit of a sore point right now. We're waiting more clarity, and the mid-cap index too is now grinding low. But as was the trend yesterday, the bulls would be hoping that the second half turns out to be better.
We'll have to see which way things go, because there's this uncertainty, as you said, about the US-India trade deal. That continues to be the big trigger point going forward. For now, Nifty is closer to the day's low. It has come up sharply from the highs. Mid-cap index is the one that continues to be an underperformer. So that index is down 0.4%. You know, for larger part of the day so far, it's the Nifty IT which had been supporting the Nifty, but that too has come off from the highs of the day. So look at that. It has come off and it is at the day's low. So all these stocks which will be in focus, Nifty IT especially, we will kickstart the earnings season soon as well. So all eyes on the IT names as well. Nifty Auto is the other one. For now, that is the top gainer, but that too is up just 0.1%. It has recovered from the day's low so far. But you know, while we are talking about action in the secondary space, there's a lot of action in the primary space as well. Let's kickstart trading hour by focusing on the primary market. 860 crore rupee IPO of Crizac has hit the street today and will close on July 4th. The company is a B2B education platform for agents and global higher education institutions. Following the IPO, the promoter share in the company is expected to reduce to 60.42% from the existing 8.48%. To discuss more on this, Vikas Agrawal, the CMD of Crizac, and Christopher Nagel, the CEO of Crizac UK, join us now to take the conversation forward. Gentlemen, good morning. Thank you so much for joining in. Vikas, let me come to you first up. For the benefit of our viewers, can you simply explain what your revenue model is, who are your clients, and what does the business entail?
Sure. As a company, we connect various counselors and agents across the globe via our platform to universities in various destination countries like UK, USA, Ireland, New Zealand. These counselors get students, they counsel the students, help them select the universities and courses where they want to apply. These agents will then put the application to our platform. We coordinate with universities and get them the offer, which in turn pass it to the agent who help the students to apply for the visa. So we are a link between, let's say, agent and the university.
Okay, so your clients are majorly the universities across the globe.
Yes.
And which is the biggest geography for you, Vikas?
At the moment, from a source perspective, India would be our biggest geography, where we have 60% of our students coming from. And in terms of destination market, UK would be our biggest destination market, where 90% of our students would go to.
Gentlemen, good morning. Thank you for joining in. To Vikas, before I get to Christopher, you know, your issue is a complete offer for sale, which means that you would not be receiving any proceeds from this. So with no proceeds coming in from the IPO process, how do you plan on funding your potential expansion plans, and are there expansion plans that are lined up for you?
Sure. The company at the moment is sitting with 400 CR plus cash in the books. So company does not need any additional capital for expansion. It's a very asset-light model, and we decided to go for IPO because it will bring trust and visibility. In terms of expansion and future plans are concerned, company has sufficient cash to do that.
Okay. Christopher, let us get you in the conversation as well. This is the basic platform which connects agents with universities, is what Vikas explained to us. What about value-added services? Is that something that you will be looking at expanding into, be it student loans, forex, visa, accommodation support? If yes, how much is it as a percentage of revenues currently? If not, how do you plan to scale it?
Nice to see everybody today. It's true that at the moment, our major source of revenue is our services to universities. We have plans to add on other services in future. Some of those you mentioned just now, like student loans, accommodation, or forex services, which all students need. Our plan is not to, manufacture these products ourselves, but to distribute them from other suppliers. Because we are a platform, currently we help students gain admission to universities, but there's no reason that our same platform can't be used to distribute these other services as well. These are not currently in our revenue, but we hope that we'll be able to roll them out very soon.
How soon would that be? Any timeline? And if yes, would that require additional investment? Just trying to understand the future course of the business.
So we're hoping it'll be in the coming year that we'll add these services on and they'll start to, contribute to our business. And because we are a platform business, there's negligible capital investment required to add additional products and distribute them through our platform.
Two-part question, Vikas. You mentioned most of your revenue also comes from the UK geography, almost 95% of it. What steps are you taking to diversify your geographic base to reduce this revenue concentration worry? And part two of my question is, since you have close to around about 4,000 agents in around 40 countries, what are the steps that you're taking to expand into other areas, be it the likes of Latin America, other parts of Asia, excluding India, of course, and say for the likes of Africa?
In terms of bringing down the risk, as you said, 95% of our business is for UK. We are looking at expanding into different destination countries, which is USA, Ireland, and Dubai to start with. We're also looking at expanding into Australia if possible. At the same time, we are expanding to various source market, again, which would help us diversify and de-risk the business. As of today, we receive application from almost 75 different nationalities. So that would help, even if one particular corridor, say for example, India, Canada, last year got choked or had diplomatic issues, expanding into a different source market would kind of eliminate those risks. To answer to your next question, yes, the company has a desire to expand into new geographies for source market. For example, Southeast Asia, where we have a negligible presence, we would like to expand into that one possibly in a year or year and a half. Likewise, you rightly said Latin America again is a good source market, especially for US and Canada, and would love to expand into those ones as well.
Okay, because while we're talking about expansion, let's quickly take a look at the financials as well. While revenues have grown well, even profits have grown well. However, margins have been quite volatile for you. You've seen 25% margins in FY25, that was 13.5% in FY24 and 38% in FY23. What explains this volatility? And while you're talking about expansion into markets like the US, the policies that are coming by the government as well, do you think it'll be difficult to penetrate such markets?
Sure. With reference to variation in volatility of margin, our margins was stable last year as well. It's just that last year we had a extraordinary expense of acquisition and termination fees, which had showed a dip. But if you look at the absolute number, it was same in line with roughly 25%. We expect almost plus minus similar range in future as well as the business goes. With reference to your questions to US, yes, there is a bit of a turbulence at the moment, but our US base is quite small. US is by and large the biggest destination, not only for Indians, but across the globe. So we still believe that irrespective of these headwinds and news, US will still continue to grow decent numbers.
But in case there are any adverse student-related policies that come out from there, Vikas, because there is a lot of policy uncertainty over there, whether we like it or not. It's a fact. And if there is a case of any adverse policies, and you mentioned US is a very large market, but since it's a very small size of your product base, would you look to diversify or pivot from there and move on to other geographies? And since I'm getting into this, your top three, dependence on your top three global institutions has come down from almost 63 to 53. Does that number come down further as well?
Yeah, you're right. Just to move out of US as well, though we expect to grow in US, Dubai, for example, is offering a golden visa to students. So they are welcoming students. And the best part is, if you had gone to the news of late, India itself is becoming a big destination market. Last month, government of Maharashtra signed up 6 or 7 tie-up with foreign institutions to set up campus outside Navi Mumbai. There's already 2 or 3 running in GIFT City in Gujarat. There are a few coming up in Delhi, NCR. So India itself will become a big destination market. Since we have a very big network of agents in Africa, South Asia, we believe we will be able to contribute and bring students from those countries to India. And that would also help us kind of de-risk the company from any kind of volatility in terms of policies.
Okay. Vikas, a lot more questions, but I think you'll be able to answer a lot more of them after listing itself. So thank you so much for joining in today with all those details, explaining the business to us, the future plans, and what kind of new areas you're looking at in terms of new business prospects as well. Thank you so much, Vikas and Christopher, for joining us today and answering all those questions. With that, we'll do one thing. We'll slip into a break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
Welcome back. 70 points lower on the index. The Sensex is also down 200 as of now at the lowest point of the day as we speak. We're shifting focus to commodities now. Manisha is here with us to talk about the crude oil prices ahead of the all-important OPEC meeting over the weekend, Manisha.
Oh, well, absolutely, yes. You know, and interestingly, we've started the month of July on a positive note after posting strong May and a stronger month of June as well. May was up 8% and June prices gained up by nearly 10%. And July started on a firmer note, as you can see on your screens. Well, yes, it's the OPEC Plus meeting. It's on 6th of July. And while the markets have pretty much factored in, and there's a lot of conversation already that we've had on how for a 5th straight month in the month of August, you could be looking at 411,000 barrels per day of an increase in sense of output from OPEC. With this, it will become 1.7 million barrels per day by the time we're reaching the month of August. So it has been a very steady pace that OPEC has been wanting to come into the market to regain its market share. And this is something that the street really has seen baked in case of prices. The other thing is about geopolitical tensions, which seem to be easing right now, especially with Israel and Iran ceasefire holding. So that tells you that there are no supply concerns. And on the other side, the demand also continues to be on the stronger side. There's uncertainty, of course, because of the July 9th deadline when it comes to tariff agreements as well. If it doesn't happen, some of the countries could be going back to higher tariffs as well. So that's an uncertainty or a choppiness that the markets are looking at right now. The weakness in US dollar index trading at around 4-year lows also seems to be supporting buying in case of crude prices as of now. So the last couple of sessions, the first 2 days of July, clearly seemingly positive there. And the street now will watch out for the US non-farm payroll data that comes in tomorrow. So ahead of that, again, some jitteriness, some choppiness, but stronger gains continuing.
Okay, so that's what's happening in the commodity space. The commodity markets, equity markets, all of them watching out for the big geopolitical development and what's happening with tariffs as well. But you do remember to tune into all new CNBC TV18 Prime. We'll be bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. The Big C, and Global Lens at 8:30 p.m. Welcome back. You're still tuned into Trading Hour. Well, there's some further pressure that we're seeing on the Nifty. It's down 70 points. The mid-caps continue to be under pressure as well. And Bank Nifty, that's a big underperformer today. That one is down around 0.5% as we speak. So it's a good time to get a technical check on the markets. Mitesh Thakkar is joining us for just that. Mitesh, good morning. Thank you for joining in. Well, do you see further pressure or second half could be something different? We have the weekly options expiry tomorrow. What are the charts suggesting?
I think, one, the market was already showing signs of supply and tiredness about 25, 650, 25, 700 zones. With the overbought ratings, I think there was a chance of a pullback happening, and I think that is playing in. My sense is that 25, 400 is the first intraday pivot, and the larger level is at about 25, 200, 215. So maybe we'll see 25, 400, and then we'll take a call from there. But the overall bias and direction remains on the upside, so trading with long bias.
Still trading with a long bias, looking to buy the dips towards 25,400. Mitesh, what about specific stocks?
I have a buy on Dalmia Bharat. Cement names are doing well. So buy here with the stop at 21.80 or just below it. And a target of 22.60 can be looked at. And the other stock which I like, that's Dabur that's a buy with a stop below 479 and a target of 500 is what I'm looking at.
Okay. Amitesh, what about the IT space? That has been one index which has been doing well, but even that came off from the highs of the day. What is the indication? Some of these names like Infosys, TCS.
Yeah, right there. I think, Infosys, though, I think was giving a breakout about 1640. It's come below that. Similarly, TCS also turned negative after opening. But the overall setup was quite positive, and these stocks have also underperformed. So they'll play catch up. From the timing, I think the stock which I like the most will be HCL Tech. I would recommend, buying that around the 200 average area, which is around 1690, 1700 zone, and then keep a stop below 1670 for targets of 1750 to begin with.
All right, Mitesh, thank you so much for sparing time joining us today. Views on the index and on specific stocks as well. We'll have you back later in the day as well. On to some stock-specific movers then. Just before we go to Vivek, just pull up Mobi quick. That has seen a bit of a fall towards the lows of the day, continuing to grind lower from its IPO price, and its post-listing high was 700 rupees, and since then the stock now at 240 is Mobi quick, 12.5% lower in the last 1 month. But as we were talking about Inox Wind, Motilal Oswal has initiated coverage on that stock, doing fairly well for itself. Vivek is here with more on this. Vivek.
Well, that's right. An interesting note coming from Motilal Oswal today morning on Inox Wind. They've initiated coverage on the stock. They have a buy rating and a target price of 210 rupees a share. What is it that they're saying? Number one, they call Inox a leading vertically integrated player in India's wind energy sector. Remember, the company delivers end-to-end solutions. So they have concept, they have commissioning of wind power projects. Along with that, they also supply O&M, operational maintenance of the entire value chain. Along with that, remember, the company produces both 2 megawatt as well as 3 megawatt wind turbine generators with a robust order book of over 3 gigawatt at the end of FY25. Along with that, there is a listed company as well, which is a subsidiary, Inox Green Energy, which manages a significant 5.1 gigawatt O&M portfolio. So in terms of earnings, they estimate that Inox Wind should be able to deliver a strong consolidated EBITDA CAGR of 38% from FY25 to FY28. And along with that, they also see ramp up as far as WTG execution is concerned from 705 megawatt in FY25 to close to 1.8 gigawatt in FY28. So the target price to earnings multiple that Motilal has assigned is 25 times FY27 earnings per share.
Okay, that's Inox Wind in focus. The stock is up 2% as we speak. That's about Inox Wind. Thank you, Vivek, for joining in. Let's take a short break. Management of Dreamfolk Services will join us next to discuss the potential impact of its program closure from Axis Bank and ICICI Bank. Do stay tuned. It's an important conversation coming up.
Welcome back. On to an important conversation then. Dreamfolk Services, that stock is under pressure after it informed the exchanges that certain programs that it operated for Axis Bank and ICICI Bank were closed, even as contracts with both these clients remain active. Now, Librita Peter Kalath, who is the CMD at Dreamfolk Services, is joining in for this conversation. Librita, good morning. Thank you for joining in. You could tell us firstly as to what was the reason as to why these programs were cancelled? What part of the contract is affected, and what does that do to the overall contract? Because Axis and ICICI being two major banks, how much of your top line comes from these two clients?
Sure. Good morning. So the thing is that, what led to this is, I think we all are aware that what happened couple of days back, or I would say weeks, right? There was a press release which stated that, these contracts are out of Dreamfolk's program. Now, the thing is that, these were the facts. I mean, at that point, yes, all the contracts were in place, everything. There was nothing as such. But The thing was that it was a pressure which was getting built up to the clients. Okay, it was a pressure tactics which were done. So to be very upfront, it is mainly done by these two major airport operators who have now started getting into the similar business. Now, if the competition is, in terms of the services or the technology or trying to build something different, that's where the competition should be. But I think the pressure which has been built up is to, tell the clients that, in case if they do not sign up with them or do business with them directly, they would actually stop their cardholder access to their airports. So this is a pressure which has been built up. And these are the reasons that, why these clients had to move. But let me tell you that our contracts are still in place. It is not that we were just managing the lounge program. Just the airport lounges. There are other services also which DreamFolks provides to these clients. Secondly, also to mention that, there are around 70 plus lounges in India. However, these operators, the airport operators who are trying to get into this business are holding around 35 to 40% of the lounges only. And the other lounges are still operational, and these programs are still live on DreamFolks platform.
Okay, Liberta, I'll ask you more about which are these programs which are still active, how much of your revenues are impacted. When you talk about these pressure tactics which are coming on the clients, is it only on the clients or on DreamFolks as well? Maybe to acquire DreamFolks or that service business, or to give away a part of their business to these airport operators as you're mentioning?
So I'm sure, and I think you are more smart enough to understand, the way the market works here, right? Obviously, the innovation or the innovative companies are always under pressure. And yes, there is a pressure built up, not just on the clients, but the pressure is also built up on DreamFolks as well. I do not want to specify clearly on, the way it is. But yes, if you actually look at it, the negative PR which has been built up from past few weeks was for only reason, to ensure that it impacts our stock price, because we are a listed company and obviously any negative PR is going to impact the stock. So I would say that yes, it is not just a pressure tactics to the clients, but yes, of course, it is much more to DreamFolks.
So, Liberta, to get this straight, were you or DreamFolks were sent feelers from competition that there is an intention to acquire the company? What was your response to that, if there was any?
Indirectly, yes, we were getting these fillers, but it is not the business what DreamFolks has created. I mean, I'm very proud to talk about that. It is the industry what we have built, right? So when you have built an industry and you are the number one in the market, right? And the intention of DreamFolks are, we do not want to stop ourselves just to be a market leader in India, but the vision is to be globally present. And yes, that was one of the reasons that, we did not want to be acquired or get associated with any of such acquisition. And we wanted to be an independent company.
So in that case, what have you done to mitigate the pressure? Have you approached any authorities? There's CCI. Are you looking at any official action in that case?
Well, we are very small, okay, and I do not want to also talk about many things, but, we are a very small player in this market, and I do not want to get into something which will further damage, because it has already created a lot of damage to our business in terms of the way things are happening. So yes, I don't feel that any of the authority would be supportive for us for obvious reasons. And that's why we have actually not been to anyone and we have not asked for any support. But yes, as a company, we are not trying to, go back in terms of, trying to stop. But yes, we have already built a lot of other services. We are doing a lot of other things in terms of the technology as well. And I would say that, in this 13 years, the way we have actually built our relationship with all our clients and the trust what we have built. And I think that, yes, everyone understands that and they all want to continue work with us. Okay. And I would say that airport is not just one of the area where we are trying to focus. There are other areas which we have already built in last interview also, I very clearly said that we are now into a lifestyle as well. And apart from
Yes.
sports, we are into railway, highway. And when I say lifestyle, we are into golf, and there are new services like social.
So, Liberta, what my question here is from the shareholders' angle. What assurance do you have for them? Because while you're saying airport is not the only business, it is one of the major businesses that you have. What assurance are you giving to the shareholders? How can you just submit to the fact that there is competition pressure? What if somebody comes into your other vertical and starts pressurizing you there as well? What should shareholders do in this case? You're a listed company.
So I completely agree. So, in other areas for that matter, when I talk about outside airport industry, obviously there is no monopolistic player right now. Obviously at the airport, there are monopolistic players. I mean, there are two large operators who are sitting and want to actually dictate their terms. So of course, that is one area where I would say that, yes, I could see a risk coming in. But other industries where we are going, it is not going to be managed by one single player. So I don't see that there's going to be a risk there. And as a listed company, yes, I have to assure all my, stakeholders who are having that trust in me to believe in me that, yes, we are going to build the way we have built the lounge industry. And you will see that, what are the other things, because let me tell you one thing, that even after these things which have started happening from yesterday, all these clients are still in touch with us, and we are trying to build. The same clients are actually going to move from the lounge, giving the lounge benefit, give some different benefits. So I would say that, yes, we are completely working on those, and you will see changes coming in these areas as well.
Okay. Liberta, we spoke to you on 20th June when you said the press release came out in public as well. But you denied back then. What has changed from then till now? What made you come out and actually talk about it, that, there is pressure on the business, authorities won't be supporting? What changed in last 14 days?
So, of course, that press release which was given, it was very anonymous. It was never clear that who is the one who has actually given that statement. Because if you actually see that it was none of our clients who had actually given these statements. And whoever has given was not even, I would say that, did not even have the to actually use the words that, they did not have those guts to even talk about that, yeah, they are the one who are actually giving the press release. And I would say that, from past 2 years, this pressure has been happening, and we are trying to maintain that relationship. We thought that, okay, we have to work together, and it is a business thing. So I always try to be diplomatic and try to cover it up. But I thought it was high time for me to now come out and tell the facts to everybody that what is actually happening. So, before more press releases come out, because I'm sure, this is how the market works, or this is how people work, that, they would come out and tell that, what are the changes they have been driving it. But let me tell you that I do not see this as a competition. I do not see it has to be a fair competition. When we say competition, I think it has to be in a professional way, talking about technology, talking about services, but not about pressurizing or threatening somebody to do the business. So and that is one of the reasons that why today I had to come out and actually talk that, what is exactly happening.
Liberta, let's get a few things straight here. There are multiple uncertainties at this point. Part one, are there any more cancellations that are likely to take place? What are your clients telling you in terms of the relationships that you had? You've mentioned you've built a lot of relationships over these last many years, but what are your clients telling you currently as to what happens next? Part two, you are saying that you're diversifying into other areas beyond airports, but airports is your biggest business. And even if you diversify into other areas, the scaling up in those areas will take time. That's two. What happens to all of these things? The bigger part is, are there any more cancellations that are on the annual?
So presently, if you'll actually ask me, there are no such cancellations, because even these cancellations which actually happen, I just got few hours notice. It was never that, there was a proper notice of a week or something, because I just got few hours notice that there is going to be a migration. Okay. Secondly, till date, I mean, till now, I have not got any news or any information from any of our clients on migrating from our platform. So the program is going on. Okay, but yes, we are getting information or messages from our clients that there is a lot of pressure from these two operators who are trying to pressurize them. Okay. Secondly, when you tell me you're asking that, yes, lounge is one of our biggest revenue driver, and the new services, what you're talking about, would take time. But let me tell you something that, lounge also 13 years back when we actually launched it, it was not something that, was immediately we started seeing volumes coming in. But today, I think, the card holder or the consumer is very well aware. The awareness 13 years back was actually very less in terms of, what are the benefits on the card. But today, I think the card holder is aware in terms of what are the benefits. They know that, what kind of card would give what kind of benefits. So I don't see that it would take long time for us to actually drive more numbers in new services, because we have also seen, and we are closely working with all our clients, because none of the clients are also appreciating what is happening in the industry, and they are also looking at an alternative to immediately build up. So I would say that all these things are I don't see it would take a lot of time. I would say that you will see changes very soon.
A couple of follow-ups to that, Liberta. You mentioned that the cancellations, even the migration bit, you were given a few hours notice from these players, from your clients. Is there a general timeline as to when for a cancellation to take place, say a week, say 15 days? That's one. And two, if today a proposal comes to you for a potential acquisition from anybody from that matter, be it competition or be it any other player who wants to get into the space, what would your answer be?
Well, I've not thought about it. As I told, that the vision for the company is to grow global, okay? And we have a lot of things to do in terms of, getting in this industry. As a listed company, I think it is more important for me to build the trust and confidence what I have built within the market. So I want to continue that. And I have not thought about, if someone is coming and talking about the acquisition at this moment, because that is not, right now in my agenda. I would say that right now the things what I'm focusing on is completely on what needs to be built, and we are actually working on building it. And you will very soon see it is a silent period, and I actually can't talk about it, but because it was just yesterday we have created a new product, and very soon you will see that is out in the market as well.
Okay. Liberta, you're talking about confidence, you're talking about focus on the business, but the fact is you're a listed company, right? So the big question is, why did you deny it earlier and now there's a U-turn? And since you're in silent period, you won't be able to tell us what's happening next. But do you think because of whatever events have happened, there's been a huge wealth destruction for individual shareholders, big shareholders as well? Do you think SEBI should look into it? And if it's such a big problem, you can't just come to media and talk about it, right? It's not a battle of narratives anymore. It's a bigger issue than that, because lounge is the biggest business for you. So what do you have to say to the shareholders to gain that confidence back? Because they really don't know what to do about it now.
Firstly, I just want to tell you that I am not taking a U-turn or, trying to cover up. Okay, let me tell you that when I came last and when I spoke about this, obviously the contracts were in place and there was no change in the contracts. Everything was intact. We never got any such communication in terms of clients moving out. As I told you that it was just on 30th late evening wherein we got this information that yes, there's going to be a migration, and that's the only reason. So I think we are following the compliances, and I'm very clear that, I would not want to give a wrong narrative to the market. I've always been very upfront and I've always given the right messages. And this time also, I have not taken time to come out and talk about it. Last time when I said it was the fact. And even right now, what I'm talking about is I'm not trying to, come to media to talk about this. You will see that what we are actually building it up, and the way would, Dream Folks is right now, doing the business. So I just want to clear that I'm not using this platform just to make myself, right. I am actually trying to use this platform to give the right narrative, what exactly is happening with this business.
We take that point. So how did these contracts reach say, others before the company then? And on what grounds were you asked to shut down these contracts? You must have had those conversations with your clients as well, right?
So as I told you, the contracts are not shut. The contracts are still on. Okay. Today also, if you actually look at it, the ICICI program is still live on our platform. There is.
So let me put it this way. What clauses were invoked? What are removed? What part of this contract is removed? What still stays?
Okay, so if you actually look at it, that there are different set of cards which actually get these benefits. Okay, so it is only the few cards which have been migrated on the other operators' platform, and there are still few cards which are running on our platform. So that is the change which has happened. So 100% cards which were there on Dreamfolk's platform are not there. There is a migration in terms of the card distribution.
So finally, Libertha, just to sum up, you mentioned that, okay, if there is a proposal for an acquisition that comes up, it is not on your agenda. It's a yes or no answer.
It is not in our agenda right now.
Okay. All right, Libertha, thank you so much for sparing time and joining us today. Of course, the reason to ask you that question, it was not the fact that you mentioned it came out on the 30th, but then since you mentioned that it's been going on for the last couple of years and you've chosen this time to talk about it is the reason why those questions were put to you. But thank you for clarifying on a lot of these aspects. Wish you good luck for the road ahead as well. That was the management of Dreamfolk Services on a whole host of issues coming by. Stock currently 4% lower, still well below its IPO price of around 326. Take a short break. The market still, well, where it was, 60 points lower on the index. Continuing that conversation on the markets with Ashi Anand of IME Capital. Stay tuned.
Welcome back. You're still tuned into Trading Hour. Ashi Anand from IME Capital joins us to discuss market fundamentals. Ashi, good morning. Thank you so much for joining in. Well, the big event, the US-India trade deal, that is something which is expected. It is keeping the markets in a wait-and-watch mode as well. There are earnings as well which are coming up, so a lot to watch out for. What's your idea of the markets? What do you think could be the important sectors we'll be watching out for?
Hi, firstly, thank you for having me on the show. So I think the markets are very interestingly poised. You are just kind of off the kind of all-time highs. And I think the two key elements that are preventing a more bullish sentiment from actually forming is one, very, very clearly, we do need to have clarity about the Indo-US trade deal. I would actually argue that you also need clarity about US and other economy trade deals, because that is going to ultimately drive the state of the global economy, and we are still dependent on global demand across multiple sectors. So Trump and the trade deals to be implemented by the US, I think you are going to need to wait to see clarity around some of this before you can get into a bit more of a runaway bullish market sentiment. Because without that, you still have the sword that could kind of really impact the global economy quite significantly. The other core element is that we are entering the corporate results season. Our expectations continue to be that across most sectors, we expect earnings to be largely muted. We've seen kind of low single-digit earnings growth over the last couple of quarters. We broadly expect something similar in the current quarter. We don't really expect to see a large growth rebound. But what is going to be very important to understand is how corporates are really looking at the kind of growth recovery. Across different segments, there are certain pressures, and I think by and large, people are expecting some of this to kind of ease up as we go into the second half. And you see a larger growth recovery going into the second half. But until you aren't seeing clearer signs of this, I think markets kind of crossing and going significantly above the previous all-time highs is going to be slightly difficult.
Ashi, good morning. Thank you for joining in. Since you mentioned the results season, would green shoots be enough to soothe market sentiments that, okay, growth is on the anvil, even though you don't see it this quarter? But even would green shoots be enough, or would you want to see a finer, more proper growth for, as you mentioned, in the second half for the markets to move higher?
So the reason we kind of believe green shoots may actually be enough, right? You have a very, very important thing which is played out in the markets over the last year, which is 100 basis points cut in the repo rates. You have seen the 10-year bond yields also fall off. As interest rates kind of start to come down, there are various kind of positive multiplier effects across the economy. It should help boost consumption demand. It should help certain on-the-margin capex. Real estate is again another segment which should get boosted by kind of interest rates falling off. So you do have a clear indication of what can lead to some form of a growth recovery. Consumption, which has been weak quite sustainably over the last kind of 12 to 18 months. If you just see the kind of impact on household consumption that a fall in EMIs can actually have, and the kind of spending power that that can release. So I think you do have the fundamental framework for a growth recovery, which is the kind of sharp fall in interest rates that you've seen. However, it just across kind of sectors, you have different challenges, right? So I think consumer has had the larger consumption slowdown. We see interest rate reduction as being some kind of a solve for that. IT has uncertainty around US Trump, right? And Trump and tariffs, and accordingly companies aren't spending. You need some clarity around that. Pharma has its own challenges. Across, if you go sector by sector, there are specific issues. A lot of the sectors that were driving growth in previous years, if you're looking at capital goods, capital markets, real estate, a lot of these have grown quite significantly off their lows over the last 2 or 3 years, and the base has now actually caught up. So, yes, we kind of believe that. So when we are talking about green shoots, I think you need green shoots that are clear enough to point towards the second half recovery. But as the second half recovery does kind of start becoming a bit more visible, I think in the context of the fact that interest rates are falling, we believe that the positive market sentiment could sustain.
Right. Ashi, very quickly, running out of time, which is the one sector that you'd be watching out for this time around in the earnings season, on the positive or maybe on the negative side as well?
So the one sector that we really clearly have the biggest focus on is listed digital platforms. We expect these to continue to do very well. There is strong kind of growth. There's underlying profitability improvement. That is the one sector that kind of remains top of our mind. But I think the other big sector is really what are the trends in financiers, because that is a space where valuations and growth and quality, all three of those line up quite well.
All right, Ashi, running out of time, so thank you for sparing time and joining us today. Take this conversation forward on another day. Take a short break here on Trading Hour, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is, of course, CNBC TV18's all-new app, where you get breaking news, in-depth articles, and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen to download the app. We take a short break. Back on the other side. Stay tuned. Welcome back. Still 50 points lower on the index, and some flashes coming on your screen. The unfortunate incident that took place at the Telangana unit of Sigachi, and the company has issued a statement saying that the accident has resulted in a loss of over 40 of their team members, and over 33 people have been injured in this incident. That's the official word coming in from Sigachi. The stock is down around about 7%, but they mentioned the fact that they are coordinating with the emergency response and the family support as well. And they've also mentioned in their earlier release about what they are trying to do with the operations at the plant. But as of now, the word from Sigachi is that 40 team members have been lost and over 33 have been injured in that unfortunate incident. But the markets, the Nifty is down around 50 points, some recovery from the lows that we are seeing. A couple of movers then. Gabriel India is one of them, a 20% circuit yesterday, 20% circuit today as well, so crossing the 1,000 rupee mark, so a record high for Gabriel India. TVS Sri Chakra is another one, 9.5% higher on that stock as well, so doing fairly well for itself. Bajaj Consumer is doing well, 8.5% higher on that stock, and RITES among the railway names is doing well for itself, 6.5% higher on that stock as well. So a lot of movers in the broader market, Sonal, but the index continues to consolidate, some recovery from the low.
Oh yes, that's the big point, right? There is some recovery from the low, especially on the mid-cap index. It was in the red for the larger part of trading day today, but there is some green on the screen. With that, we'll take your leave on this edition of Trading Hour. Stay tuned. Halftime report is up next.